Hello, everyone, and welcome back to the Impact Stage at Fintech Talents North America. I'm really excited for this next panel. We've got a fantastic lineup and a fantastic topic to cover. We're going to be looking at PPP, inclusive finance, a case study in PPP lending, and it's an incredible topic, and we're going to be exploring a really interesting partnership between three organizations. So today we're joined by Michael Pugh, CEO of Carver Federal Savings Bank, Hassan Mia, who's the founder of PayBaby, and Karen Moynihan, CEO and co-founder of Boss Insights. Hello, everyone. Hello. I'd like to start with the panel telling us a little bit about them and their institution. So if we could start with you, Michael.
Sure. Happy to be a part of this important panel. Thank you for extending the wonderful invitation, and good morning to everyone. So again, Michael Pugh, President and CEO for Carver Federal Savings Bank and Carver Bank Corp. Carver was founded in 1948 by a group of civic-minded community leaders that comprised of small business entrepreneurs, faith-based leaders, all seeing an important need for a financial institution to support people of color. During that time, if you were a person of African-American descent, you had very limited choices from a financial standpoint, and often with the larger financial institutions weren't allowed to bank in our country. So this group of leaders, pioneers, decided to get together and form their own bank. They applied for a charter in the state of New York. They were denied, so they applied for a federal charter and were granted the opportunity. And so out of that, Carver Federal Savings Bank was born. 72 years or more later, our mission continues to be the same, which is really uplifting communities with emphasis on communities that are oftentimes are forgotten about or underserved, specifically minority communities or women entrepreneurs in terms of having access to capital. And so our focus continues to make sure that we are delivering excellence and honoring all of our customers within our very diverse communities, but certainly providing and being a conduit for economic empowerment with those focus groups that I mentioned. Just another quick point is that we have 7 branch locations that are hyper-local within the boroughs of New York City. And from a digital standpoint, we're now in 9 states from Massachusetts to Virginia. And our decision to expand our reach on the digital side is because we truly believe that our mission in terms of what we do is something that many can get behind and support, especially given the current environment that we're all faced with. So thank you.
Thank you. And I feel like we could spend the entire session talking about the history of Carver. That's fascinating. Over to you, Hassan.
Hello. So shortly after the what happened with George Floyd last year, I started researching what was going on, and there are some profound statistics in the Black and brown community that have appeared to be persistent. One, Black wealth is only 10% of white wealth, and brown wealth is only 12%, and when it comes to income, it's only half. And so that, which are pretty startling statistics, but also notice that this has persisted since 1968. So while the country has moved forward in many ways, at the median level, it has not. And so further research and looking at the banking industry, there's approximately $20 trillion of banking assets, of which only about $5 billion is held by Black banks. So that led me to think about what could we do in order to start to close the wealth and income gap. And that led to coming from a technology background. I spent one time I was at Intel, Capital and that type of thing. I said, how can we apply technology to help solve this problem? And so we started PayBaby as a neobank with a focus on becoming a neobank. And if you're a neobank, that means that automatically through your mobile phone, you can have access to banking services starting with checking and savings account to anyone in the U.S. So that was the whole idea, and with that we could start to change the access to banking. And as was just pointed out, going digital actually expands it. In our case, it creates the ability to make it nationwide. And so our whole focus getting up in the morning is how do we help solve this gap and this problem? So first we looked at how do we start a neobank, and being a tech person, I looked at hiring engineers and other things. But make a long story short, we eventually acquired a neobank, so we're fully operating. It's called Wicked by PayBaby. You can download in both iOS and Android. You can get a checking and savings account. We sit on top of a FDIC bank. For those most of the people in this audience understand, in the U.S. you sit on top of a regular charter bank. We sit on top of Radius Bank now. Lending Club Bank. So that was part of it. The other part, banking ultimately involves lending. And so we also looked at, okay, how can we help solve the issues of lending in this market? And looking at the PPP program, it was clear from the data that Black businesses were receiving PPP loans at a far lower rate than the white businesses. And again, being in the technology business, I said there must be ways in which we can improve that. So we did research, and then we found Boss Insights that had a technology platform that could significantly improve the ability to both process loans and to connect the data in such a way that should improve the ability for access to PPP loans in this community. So that led to us getting together and eventually getting together with Carver, with the whole goal of how do we improve access to lending. And so our whole view here at PayBaby is that I call it the Amazon moment, because just like 25 years ago, you had Sears, Roebuck, and all that, and Amazon came along with a purely digital solution. It pretty much changed the game and changed access and everything. We believe that now digital can change the game of access to banking, which is still a large problem in this country.
Thanks for that, Hassan. And that also provides a great moment to hand over to Karen to tell us a little bit about herself and Boss Insights. And then I'm sure we'll get more into detail about this really interesting collaboration between your three organizations.
Thank
Karen,
you so
over
much,
to
Lisa.
you.
Thank you, Lisa. I'm really excited to be here chatting with these two incredible leaders in business, and I'm always inspired to hear about the vision behind Carver Bank, giving 80 cents of all deposits back into the community. And Hassan has achieved so much with PayBaby, has achieved so much in such a short amount of time. Boss Insights was created by a former Amazon employee and somebody who worked in banking as a commercial lender. And we just saw that banking in general did not make much sense. It is just too challenging for businesses to get access to capital, full stop. And today we're going to talk about a subsection of that where if it's challenging for all businesses, it's incredibly challenging for certain businesses who, quite frankly, do not have the same access as others do. So it is by virtue of what Michael and Carver Bancorp and Hassan and PayBaby are doing that this problem is being addressed. And we're just very lucky to be part of the solution here. What we did was we created a platform. So we created Boss Insights, and we set out to build a platform that would make it possible for all banks, lenders to have access to their business customers' financial data in minutes. And we do it with a portal that's accessible to the businesses and the lenders alike. It creates a transparent process for lending. It creates something that you can look in and see where information is missing. It's a single connection to customers' accounting, banking, and commerce data on demand. And by switching the conversation from asking people for details that they have to give over and over and over again to just asking them for their consent to share their details, you speed things up 5 times when you're deciding on loans and servicing those loans. That was us before PPP. But last March, there was a world-changing event where everybody was the most of the global community was put into isolation. And quite suddenly, things had to go from partially digital to completely digital in order to keep business happening. And at that time, Boss Insights offered free technology, and we were featured in Forbes as a result of it. What we were saying to lenders was, if you're going to support new businesses at this time, we're going to provide our technology to you for free. And it was at that time that I was on a panel where somebody said to me, "You're a diverse founder. What are you doing to help other diverse businesses? I know you're selling your technology to banks and credit unions and private lenders who are servicing businesses, but what specifically are you doing to get capital in the hands of people who don't have the same access?" And when we did our research, only 14% of round one of PPP recorded their demographic information, but the numbers are very shocking. 18% of loans were declared for visible minorities. 16% were declared by female-owned companies. That is not the statistics that we would like to see. And what PayBaby did for Boss Insights by introducing us to Carver Bank was give us the ability to make it possible to process loans faster. During this experience, we learned from Carver Bank that in the first round, they were on the phones. They were working till 2 or 3 in the morning, that nobody was exempt from making client calls. Michael was on the phone with clients. I've seen PayBaby in action as well, and they are working tirelessly to make sure that businesses who require funds, businesses that are often ignored by other lenders, do find their way to Carver Bank Corp. And we're just really humbled to be part of the process.
Thanks, Karen. That was a fantastic introduction, and you really gave us a sense of the purpose behind, the three organizations involved in this collaboration. Before I go on to my first question for the panel, I just wanted to remind everyone who's watching, if you have any questions or comments, please post them in the chat. You can also send a direct message if we don't get to it to our speakers in the People tab, and I'm sure they'll endeavor to get back to you. Please also answer our poll question. We're really interested in hearing. We've got loads of community banks and credit unions on the platform today, and we're really keen to hear your responses around how that financial institution fintech collaboration plays out and helps you address some of the key challenges you're facing. So with that in mind, I'd like to start with Michael and pose the same question to all of you. What do you think are some of the biggest challenges that business lenders face when trying to best serve their customers? And let's start with you on that one, Michael.
Sure, thank you. Well, so I think there's a number of things. I think the first one for small business entrepreneurs, they're often challenged with access to capital. Capital certainly helps to build stronger capacity as you think about reaching customers, whether it's through a number of different channels. Small business entrepreneurs, and particularly women and minority small business entrepreneurs, I think it's important to pull on that thread a bit, have generally been the target groups or the focus groups that have had the least amount of capital that's been available. And what we know, as an example here in this country, women entrepreneurship has been growing at an accelerated pace that is much larger than any other segment. Specifically then, as you think about, for example, women of color and Black women entrepreneurs have been the second fastest growing segment out of all of women entrepreneurs, but they're the last in terms of income that's generated from their businesses. If you then take into consideration the important factor about wealth and how wealth is often transferred, it's generally transferred through equity, right? And so that could be the equity and the ownership that you have in your home, in your savings, and all of your investments, etc. But then it's also the ownership, the equity stake that exists within a business. And in general, cases, what we've seen from the statistics is that women and minority entrepreneurs have not had that wealth transfer the same way in order to be a launch pad for them or foundation to support tough economic conditions. We saw during the 2007 2008 economic recession that the same segment of entrepreneurs were largely left out of the full recovery during the 2013 window. And I anticipate that as we navigate through this challenging time, that same segment may largely be impacted and see a slower recovery as well. So capital being one of the most important components. I think the second part is this, what we've learned is that when we talk about capital, relationship capital is equally as important, because in many of these entrepreneurs and small businesses, they are now going to have to think about how to reimagine their businesses. And the successful implementation of that will largely depend on relationships with financial institutions to help think about the business plan and structure, the capital that's needed, relationships with fintech partners to help think about how to reimagine the business. Just as an example, I was watching a very innovative commercial where Microsoft Teams was highlighting the importance now of doing virtual shopping forums for customers. So if you are a small business that owns a retail brick and mortar, perhaps through the Microsoft Teams component, you could do virtual shopping that doesn't allow you to enter into the store, but you can tell the salesperson there, I'd like these items, please, ship them to me. You've got that's innovative in from my perspective, particularly as you start to think about ways to help small business entrepreneurs that have less than 50 employees, but are extremely important to the overall ecosystem and sustainability of our nation's economy. So I'd summarize my points again with just saying, while there's many more issues, certainly capital and then the technical support to help reimagine the business from a future standpoint will be very, very much essential to overall success of our nation and small businesses.
That's fascinating. Thank you, Michael. So it's really about understanding the customers that you serve and how to support them through these challenging times, and even using, like you said, the idea of small businesses selling over something as, I won't say simple, it's probably not the right word, but as, ubiquitous almost now as Microsoft Teams. Hassan, over to you, because I imagine a lot of what Michael said will resonate with you and the communities that you aim to serve.
Yes, I mean, just sort of, like Michael said, access to capital has been a huge issue. I mean, in the world, in many ways, I come from in venture capital, less than 1% of all venture capital goes to Black entrepreneurs. And then we talked about the size of the, banking industry. So unfortunately, and particularly in the U.S., banking skews towards the wealthier customers. So since Black businesses tend to be smaller, the larger banks tend to want to go with the larger customers, which would automatically, not just because they're Black, but in general, not go as much to the smaller ones because of fee income. And so that misses out a lot of opportunities that exist, right? So that's one thing that we need to solve. And then related to that is the whole idea of, as Michael pointed out, the idea of technology. And technology starts at a lot of levels. One area of technology even starts, we're learning from PPP loans, is, you need to have, if you have everything integrated in the QuickBooks and everything else, it's easier because your documentation is there. Well, many startups, they have a great idea, but they may not necessarily have all these tools in the beginning. So that's an impediment. And so the idea now is, how do we move from these barriers to access and make it much easier so that any great small business can get whatever they need to be on equal footing for these more established companies. And so that's what we're about. And I see now that the technology is moving to the point where it is, and this is where the pandemic has helped a lot, where it is starting to make a lot of these technical barriers disappear. For example, like now you can get a bank account by just clicking on the Google Play or App Store, and then boom, you click a few buttons and you have it. Versus needing to go into a branch and fill it out. So that is a small example, but a big example of a technical barrier. There are other ways in which all of a sudden technology is becoming more accessible, which will allow these underserved businesses to get a greater access. And I think we're at a moment in time where that will start to increase.
Thanks for that, Hassan. And Karen, thinking about some of the barriers, technical barriers that Hassan has just illustrated so strongly, how can Boss Insights help address some of those barriers and take them down and increase access to capital and other banking services to currently underserved communities?
Thanks, Lisa. That's a great question. I think the first thing that has to happen is fintechs or technology providers just have to listen. We have to listen, hear the challenges, and then take those challenges on. So every time I'm in a room with Carver Bank and PayBaby, we learn more. Now, the challenge that was presented right now is that not all businesses necessarily have QuickBooks. QuickBooks costs money. We're talking about a community that is underserved. That's one of the reasons Boss Insights has integrations to 10 accounting providers, and we usually suggest Wave is the one to go with first. Why? Because Wave is free. So that addresses, should somebody want a cloud-based technology tool, they can use Wave and they don't have to have any outlay of cost. So that solves it, but only part of it. Some businesses, depending on who they are, might not be comfortable with cloud-based technology. And so it's all well and good for people who have been in certain environments to understand that you should do all your bookkeeping on QuickBooks, but not everybody is coming from the same place. That's why Boss Insights has the capability in our portal to accept desktop reports from both QuickBooks and Sage, but also to have an Excel file that's accessible to anybody. So if you are literally using a shoebox, and it doesn't just have to be for people who are excluded from the conversation. A few weeks ago, I heard about a business with $10 million in revenue annually that was using receipts in a shoebox, and all they had was their tax return form. The point is that even for that type of business, this platform will support them. In short, we're not really expecting a business to come to us the way we need them to come to us. We're doing the opposite. We're listening. Where are you at this point in time? We know that capital is one of your top 3 priorities. We know that you have been excluded from the conversation. And it can be excluded because of your gender. It can be excluded because you're a visible minority. But we know that you don't have the same access. What we're going to do is come to you however you are ready, accept your information, and then look at you on your merits and then show you what that looks like so that we can help and support you. That's the idea behind all of this. The larger conversation comes when there are economic opportunities. PPP was an opportunity for businesses to get funded on the basis of how many employees they had, or if they're a sole proprietor, even that could get funded. So here's an opportunity for a business who might have been excluded to get access to capital. And the SBA made it possible for a week in the second round of PPP for only those types of businesses to get access to capital. So if we're all working collaboratively to present these opportunities and then make it easier for you to send in your information, that's what we hope will make the difference. If it still doesn't, we're always asking people, what will make the difference? Tell us about the reality of your business and tell us how to make this better for you.
Thanks, Karen. Those were some absolutely fantastic examples of the importance of listening, understanding that not all businesses come out of the box exactly the same, and what the second round of PPP lending offered in an opportunity to support, be more inclusive in supporting businesses. Michael, what changes did you make thinking about this second round of PPP to better serve your business clients? What changes did you make as an organization?
Sure. Well, I think in order to answer that question, there's probably a little bit of background information that we have to be able to share. The first launch of the PPP program, when it was rolled out, we saw that a sizable number of small business entrepreneurs were ultimately left out. And the reasons that they were primarily left out included needing support to better understand the application process, what it meant to have a forgivable loan, how the forgiveness process was going to work. But then there was also the sheer scale and competition with much larger businesses to apply for the same funding. So if you here, of course, it's keep in mind the Small Business Administration considers small businesses to be 500 or less employees. The businesses that were largely impacted by this pandemic and did not have scale and opportunity were those that were much smaller than that, 500 number. So there was that component. We also saw that then nonprofit organizations have historically not qualified for small business loans. And this program was designed to support these nonprofit organizations, and especially in the communities that we serve, there are a sizable number of nonprofits that employ considerable number of people within the community. And the social service work that they do has a significant impact to the overall strength of the communities, again, that we serve. So those small nonprofit organizations were told that they were eligible to apply, but then when started their application, ran into technical problems. It's important to note that the Small Business Administration worked very closely to try and address this issue. I testified in front of Congress, and there were a number of important steps taken at the state and federal level to ultimately address the issues getting through the application process. But it didn't happen without some pain and heartache, and a number of small businesses, frankly, left in a very uncertain state. By the time that things had ultimately been re-engineered and worked on, we were able to generate more than 200 applications that were approved and processed through the first round, and provide access to capital to more than $35 million. The part that warms our heart the most is that we participated in the preservation of more than 3,400 jobs in the communities that we serve. What we also learned is that in order for us to be able to support the communities, a technical partner was going to be mission critical. And so, for example, in the first couple of rounds of the PPP initiative, we launched a partnership with Equitrust, which is owned, one of the principal owners is Magic Johnson. There's another firm, MBE Capital, and Carver. And we provided more than 16,000 loans nationally through that partnership. And they were using fintech solutions to ultimately help them scale and reach more customers. So we learned that, with the 200 applications we originated within our local footprint, and that was all hands on deck, calling customers, including myself, and physically helping them get the application through the process, because many of these businesses didn't have accountants, attorneys, bookkeepers, someone to help them. And the amount of sweat equity that it took to do that just from the 200 that were originated, yet through a fintech partner, over 16,000 applications nationally were processed and approved. it didn't take rocket science for us to know that in order to improve our efficiencies, have a greater impact as this next tranche was rolled out, we wanted to engage a fintech partner to help us with every step of the solution. It made it even more special to be able to work very closely with Boss Insights, a woman entrepreneur that cares about the work that's being done and uplifting entrepreneurship at a national level. And of course, Hassan, a person of color that has been very much interested in the economic empowerment of communities of color. And so the missions are aligned, and the lesson then learned is aligning mission with technology platforms to ultimately help you be able to deliver. And we've seen a much more fluid process as we're trying to reach customers today, especially with the focus on our hyper local communities in greater New York City. And that's being done because of this partnership. So key lessons that were learned and have been able to be transferred into this next stage of the journey.
Great. Well, that's a super example of having an impact, but also a lesson in having aligned objectives and finding the right partners to collaborate with. Hassan, this seems like an ideal moment to pass over to you, maybe to pick up on some of what Michael said and talk a little bit more about how innovation increases access, facilitates access.
Sure. So, one obviously is these platforms that can increase processing speed and other types of things. But beyond that, we were talking earlier about, the lack of capital. And there, in this, one reason there's a lack of capital because many of the practices used for lending, one of the biggest being scoring, is something that is a lot to a large extent based on legacy. The other one in banking, they call it KYC or Know Your Customer, and the tools they use to approve someone. Since we work and through our platform, we're looking at some of these newer technologies using artificial intelligence and machine learning, where there are alternative ways in which you can look at someone's score, and you'll find a lot of these businesses and a lot of people individually who previously appear like they may not qualify, that they were difficult to qualify, actually are very good customers. It was just a matter of how the methodologies were being used. So this problem of access is multi-tiered, but we need to solve some of these. First, we need to recognize that's an issue, and to that area, it's part of what we do with PayBaby. We've actually looked at other parts of the world, like in Africa and India, where they're going from hundreds of millions of unbanked, and they're discovering alternative ways to do scoring, and they're accelerating the number of loans and how many people can qualify. So that's a huge part. And I would say they're using what I call artificial intelligence or machine learning to come up with better ways to assess customers, and that needs to be added in this area.
Thanks for that, Hassan. And Michael, I believe you want to come back on some of what Hassan just said.
Yes, thank you. So Hassan's point about finding solutions that don't rely on the traditional scoring process, I think is extremely important as we look at the future state of supporting small businesses. Some of the data and statistics tell us that 40 million Americans do not have a traditional credit score, and or that score is considerably low because there's relatively low activity there. Many Americans can't really articulate how their credit score is created, and so some of the driving factors there. But yet what we know is that the credit score speaks to only a part of the person's commitment to repaying their debt and overall credit character, if you will. There are a number of other elements that have to be contemplated. And so I think as we look at the future state of supporting businesses and entrepreneurship, we do have to look beyond some of those traditional scoring mechanisms. And this is where fintech solution plays a very important role in helping community development financial institutions like Carver reimagine the way we measure and monitor risk associated with credit character, but still at the same time focus on supporting small businesses that very much will not be able to grow or survive if they don't have access to capital.
Yeah, that's a great point. I mean, as Hassan said, it's recognizing all the tiers in this process. Hassan, back to you, because I think there's something you want to add to that. And then to you,
Yeah,
Karen.
yeah. Just quickly on that area. So one thing that we're working on is that Michael mentioned something very important. Credit scores are one of the most opaque things in anyone's life. I don't care how good or bad your score is, hardly anyone knows what's behind it. So we're actually working with one of our team and a partner on how do we get rid of the black box while preserving privacy, so to speak. So one and the key area of technology that's being used right now is what I call digital ledger technology, also known as blockchain, what people know, and how you can create a flow of trusted information that can be more transparent while preserving what PII or personally identifiable information. And so there's a lot of exciting things happening that can considerably transform credit and how people can get access to it. That we're just touching the surface. Related to that is the other thing that, particularly in a lot of communities, people speak in terms of education, financial literacy, and those kind of things. That's which is good. The more you know, hopefully you'll manage it better. You'll be a better business person, a better consumer. But even there are a lot of things that are happening. Like, for example, in our Wicked by Pay Baby banking app, it automatically categorizes all your spending. So you could immediately know that, hey, I spent $100 on Starbucks when maybe I should have spent a little less and put that money in doing, groceries instead. So these types of changes are exciting, and they should do a lot to help both businesses and consumers do much better financial management and get access to credit.
Thanks, Hassan. I mean, you're at the right conference to be mentioning new fintech solutions and blockchain. Karen, over to you. I mean, a lot of what we're discussing here really has to do with data, right? And this is your area of expertise. Do you want to speak to some of the challenges that both Michael and Hassan have laid out?
Yeah, I'd love to just break down what it takes to get a loan for a company. I think each of us have experienced it. And the thing that's most important at first is to take a look at that company. So you need to understand their financial statements or the banking statements, depending on how much capital they're asking for. If it's a small amount, usually it's their banking statements, that's enough. And if it's enough of amount, a significant amount, you need to see their financial statements. Only after that, when you have the ratios that the bank will calculate on behalf of the business, can you then approve a loan? And before it's done, you have to do something called a credit check. And that's just a tick box. If they have a good credit score, it's great. And if not, there's problems. So what we've been chatting about is that credit box. And Boss Insights has reached out to each of the credit bureaus to say, we'll happily provide our technology to you to make the credit process address some of the issues that Michael and Hassan are so politely stating, which is it does not look at a business and measure them on their merit. It is very hidden and opaque what goes on in that credit score, right? So the business is judged on it, but they don't really know why or how. That's the problem. It's a problem that happens later in the lending decision. The first problem is, how do you even get a read on the business? Things are happening so quickly. It used to be that companies would have financial statements and they'd have an accountant review them once a year, and that could give you a good sense of how healthy a business was for the next year. That's a lot harder to do now. So Boss Insights has already accelerated that and automated. You can get access to the accountant prepared numbers. You can get access to the company numbers in the middle. What we're adding to the mix to help lenders out is adding real-time revenue generation numbers. And by doing that, a lender can see how healthy a business is and how much they're growing their revenue in certain ways during the course of the year. All this has to happen before a credit score is even really pulled. And what we want to continue to do is make it very easy for lenders to get access to the company information. It can be verified, it can be shown, and that lets you know how healthy the business is. The last point I wanted to make was on something called the character of credit. So for all the lenders out there, I know that you've all had the 5 C's of credit and they're ingrained in your mind. And with all of this technology, people are afraid because we're not meeting business owners, we're doing everything virtually. It's really hard to assess character. But technology makes that easier too. You can pull trade references. You can pull supplier references. You can see if a business is making their payments on time. You can dig into instances where that's not possible. All of this is much more indicative of whether a business will work to make sure they meet their commitments, far more than an opaque score. But I will tell you that some of the credit bureaus that we are in discussions with partnering with are looking to address this as well, adopting things like business credit scores instead of just personal credit scores. So a business is judged on how healthy the business is, looking at new forms of technology to adopt. So there are a lot of people in this industry who are trying to make it possible for a business to see what is happening when they're applying for a loan in real time, to make it clear. That's what's most important here as we move forward in 2021. We have to make things happen more efficiently. We have to make them more transparent, and we all have to be working together collaboratively to make that happen. The Boss Insights platform, especially the PPP platform, gets updated regularly, and it's because we get feedback from lenders like Carver and brokers like Paybaby. I'll even give a specific example. Not all businesses who are sole proprietors are going to know that they have 100% of the shares. This is something that the SBA requires reporting on. So we changed our technology to autofill that in. We also changed our calculator to suggest areas where businesses could apply for more loans. This is all based on feedback we get in market. And if we're greedy for anything, it's for more insight into what businesses need to see so that they can provide the information they need to provide to the lenders to get the deal done. So we're always on the lookout. And if any of you out there have any suggestions on what we should be collecting, please let us know.
Thanks, Karen. That was really interesting, speaking to the importance of the data and for an institution to have confidence in it, but also to be fundamentally more forward-looking and progressive. So thanks for those insights. We only have a few minutes left. I can't believe how quickly this conversation's gone because I feel like we could go on for ages. But Michael, I'm going to go to you first for some closing words. Thinking about, this has been a uniquely challenging year. Particularly for communities that weren't adequately served before the crisis. And as you mentioned, don't perhaps have the stocks of wealth to fall back on without access to capital. So what's on your wish list for the second half of the year in terms of what you'd like to see happen and what's most important for you in serving your customers?
Sure. So I think on the wish list, that's such a great question. For us, it is to continue to deepen our partnerships with fintech partners to think about how to reach small business entrepreneurs and help them navigate through this very difficult time. It's important to note that 80 cents of every dollar that Carver has on deposit gets reinvested in the communities that we serve. Over the past few years, we've invested more than $23 million in access to capital to small business entrepreneurs through public and private programs separate from the PPP initiative. And these programs have been designed to help these small businesses grow. We've seen amazing success stories of small businesses that have moved from 1 or 2 employees to having north of 20, 25 employees or so, and just continuing to thrive. We've also continued to focus on financial education, and we think that this will need to be something to reimagine from a technical standpoint in terms of how we deliver it. But we've helped to educate more than 16,000 people, attendees over the past couple of years in terms of financial education programs. And this has been especially important for small business entrepreneurs because when you think about understanding debt, income, taxes, insurance, all of those key factors are extremely important to the growth and sustainability of the small businesses. So looking ahead for us, our mission will continue to be the same in terms of economic empowerment. After all, we are a U.S. Treasury designated a CDFI, which is a community development financial institution. But that mission for us will have to include fintech partnerships to help reach our small businesses in a very, very different way. And we'll focus on access to capital and technical solutions. One key thing that I will just say we're working on now is that we've been, through a couple of corporate partners, we've been able to raise additional capital that will be used to develop a micro small business loan program. And that loan program will be designed to support small businesses without using traditional credit scoring as part of it. As we continue to focus on our relationship with Boss and PayBaby, we'll be giving it some thought in terms of how do we take this program and apply the same fantastic partners and lessons learned through this paycheck protection tranche to help us with now the new loan fund that will be coming up soon.
Well, thank you for that, Michael. There were some great things on your wish list. And passing over to you, Hassan, what's on your kind of to-do or wish list for the rest of 2021?
Yeah, sure. So taking off what Michael said, that's fantastic. The micro lending program. And I will combine a couple comments he made that are really, really good. So he mentioned that, we went from a world that everyone would meet, and then thanks to the pandemic, now we're all meeting virtually all over the world, and it's accelerating the power of digital technologies. So, now they're looking at 9 states, now you're looking at the country. So what we're seeing is that we're at a point between the fact that we've learned how to collaborate virtually, we're learning how to get data more real time, and we're learning how to gain more trust through data and collaboration. So what I see as the next step is combining those things to bring it to these parts of the market that were previously unserved. Because there's even at the most far-reaching parts of our world now, they're touchable. And almost everyone has gotten to the point where they can start using these technologies and they're getting comfortable with it. So what I see over the next year is that we start really expanding these type of efforts where we can reach these people. We can use alternative scoring methods. We can use alternative ways of doing lending and then having the data to connect it to. And that would radically change the access to capital and the success of these businesses and people that have previously under the pre-pandemic, and no one wanted the pandemic. But there's a sort of the silver lining part of it, where now we have this massive, everywhere where people have gotten comfortable using these type of technologies.
Thanks for that, Hassan. And Karen, the final word is with you. Whether you want to expand on your 2021 wish list, or do you want to give us one final reflection on the power of what seems to have been an incredibly impactful and effective collaboration?
Sure. I mean, hard to follow up Michael's mic drop moment of more funds available for people who need it most. We will attempt to come in closely behind that. It's been really inspiring. I mean, we're talking on a panel today, and the people who are listening to this are coming from fintech lenders and private lenders and banks and credit unions. And it's going to be hard to summarize this for people who didn't live it in 2020 and 2021. It really is a shift. Lending models are shifting. That's what Hassan just spoke about. We're going to shift the way we evaluate. And I think there are 3 individuals here who are incredibly motivated to create sustainable businesses out of supporting companies that in the past were excluded. We're all focusing in that area. So the question before us is, do we want to be working to sell a checking account and a savings account, or do we want to be working to gather the best-in-class fintech Pair it with a banking partner who understands regulation, who understands longevity, who can actually serve the community in a full-fledged way, and then gathering fintechs to solve pinpoint challenges, right? Boston Site solves data. There are a lot of other challenges before us, and we need to be able to collaborate in order to serve the businesses of today and tomorrow. That's really our deepest hope for what 2021 will bring.
Thanks for that. And that really was a fantastic closing note, Karen. And this was a fantastic session on which to close the impact stage, because it brought together so many of the themes that we've been discussing across the day. And I wish I could bottle up the sense of purpose that you guys all have and, push it out across every financial institution across North America. So thank you so much again for your expertise, your insight, for sharing on the power of collaboration. So Michael, Hassan, Karen, thank you again. And for everyone listening, don't forget to post your comments or questions in the chat or message any of these guys directly, because I'm sure they'd be happy to carry on telling you about all the work they've done over the past year. Thanks, everyone.
Okay, thank you. Bye.